Today, I want to walk through a $1 stock that most investors are ignoring, or maybe they don't even know about it. But the setup going into 2026 is becoming hard to ignore. So, the company I'm talking about is Bridger Aerospace, ticker symbol BAER. The stock is currently at $1.70 and it's down year to date. But this is a turnaround story that I think it's a business where the operations are improving, the financial flexibility is increasing, and the long term demand is being reinforced by government spending that we are seeing on the back end. So this company actually does is that they provide aerial firefighting services to U.S. federal and state agencies. Their aircrafts are deployed for wildfire suppression at scale. This is not discretionary spending. This isn't going to Texas Roadhouse on a Monday. When wildfire intensity increases, funding will also follow. Over the last several years, wildfires have become more frequent, more destructive, and more expensive to fight in America. In response, the U.S. has passed a lot of federal legislation, and agency budgets have continued to expand funding for wildfire response instead of reducing it. This matters because this is not a consumer driven business cycle. This is infrastructure spending tied directly to public safety. So I think that this company sits directly in that demand stream. And as we could see in recent news, some things that I think is what will drive the turnaround is one of the most important recent developments is that Bridger signed a purchase agreement for 10 FF-72 water scooper aircrafts. These are the ones pictured right here on the screen right now. And these are basically modified Airbus A321s aircrafts, and the upgraded is meaningful from an operational standpoint. Each FF-72 can deliver approximately 7,200 liters per water drop compared to their existing water droppers, which can drop 6,100 liters. That difference matters a lot inside of this type of domain because more water per drop improves the mission efficiency, increases coverage per area, and enhances the revenue generating potential of each aircraft. So this is not about flying more missions, it is about doing more work per mission. For context, Bridger's existing Super Scoopers are estimated to generate around $8 million in EBITDA per aircraft annually. So if the FF-72 aircrafts ramp towards similar utilization levels over time, this represents a substantial increase in potential EBITDA capacity across the entire fleet for the company. So this is not going to be something that is an experiment. This is operational improvement that will directly improve their finances in the near term future. So another key part of the setup I'm seeing is that Bridger has cleaned up its balance sheet and improved financial flexibility. This matters a lot because aerial firefighting is a capital intensive business. The aircraft are expensive, the maintenance is a lot, and it's constantly ongoing, and leverage magnifies outcomes. So when improving operations are paired with better financial structure, equity outcomes can change quickly. So looking at the expectations, the company has beaten their expectations on the year-to-date actual by a long side, and they have raised their guidances for next year and this year as well. From what we saw here is that with the continued strong fleet utilization in the third quarter, supported by record task orders for our Super Scoopers, we remain on track to end 2025 at the higher end of our previously issued guidance, EBITDA of 42 to 48 million. Revenue has already exceeded the top end of our guidance range, which is just showing a lot of positive features coming up. And as we have seen in the past, the EBITDA growth is outpacing revenue growth, which is suggesting improving margins on the back end for the company, better utilization of their existing fleet of aircraft, and stronger operating leverage. So these are all conditions that often lead to a better re-rating in small cap equities. And this is especially when the business is asset backed and contract driven like this company. So I think that Bridger's current market capitalization is sitting at just around $94 million as I'm recording this, while the enterprise value is sitting at $651 million. That gap is very large and it reflects a lot of leverage. Owning a share of this company is effectively owning a claim on improved execution. So as the EBITDA grows and the balance sheet continues to decline in risk, I think that relatively small improvements in fundamentals can translate into large changes in equity value, which will in turn lead to a higher share price. This is why I think the timing matters, and the equity often begins to move before the balance sheet looks perfect. But either way, I think that we are close to full execution, and a lot of people are saying that profitability may come sometime next year. So, as we've seen, another huge thing I want to point out is that the insider buy we saw a couple weeks ago on December 2nd, we saw 300,000 shares of common stock were purchased in three separate transactions totaling $540,000 at an average price of $1.80, which is above what the current stock is trading at right now. This is a meaningful purchase by someone with full visibility into the operations, the financing, and the contract dynamics behind the company. Insiders do not buy shares of companies that they think are going to go to zero, of course. So they buy when they believe the market is mispricing the future outcomes, the operations, and I think that is what is going on here. And for a lot of things we've seen online, I think one of the main ones I want to point out is that someone on Twitter said that they had the opportunity to speak with an employee at the company, and they discussed that he wants to buy shares in the company but isn't allowed to right now because of the position he holds. And this makes sense because they have a lot of stock options already tied into these um, investments and into these work roles. So he wants to buy stock, but he is not allowed to. That just goes to show how much they expect the future returns to be. And I think that 2026 will really matter for the stock because the multiple timelines converge at this level. So first things first is the fleet expansion begins to show up financially. The FF-72 aircraft are not just an announcement to get by in the December months. They represent a step change in capacity. As these aircraft move from purchase agreements into deployment and utilization, the income statement begins to reflect the added capacity. As more water per drop improves efficiency, and better efficiency improves the economics per aircraft, and the better economics per aircraft just affects the entire fleet and the entire company as a whole. Another thing I want to point out is that EBITDA growth becomes visible and harder to ignore as it continues to grow year over year steadily. The move from 38 million in EBITDA to 49 in 2026 is not marginal. It is meaningful increase, especially at a company that is still at this small of a level. And for a leveraged business, this matters disproportionately because coverage ratios improve, the depth metrics tighten, and the perceived risk profile begins to decrease, in my opinion. So, third thing is there's a lot of wildfires going on. I mean, if you've been looking at the news the last couple of years, wildfire seasons are continuing to go on. They are getting longer, and the severity is continuing to increase. Federal agencies are spending a lot of money on these types of services, and they are trying to get this down pat. They are planning capacity expansion over multiple seasons. And as we've seen, some of the main ones I pointed out earlier in the video, the bipartisan infrastructure law with a historic $5 billion in supplemental funding. But we also have some others here that are also a huge asset for the company and that could really create a change in the stock price in the near term future. As we see, there's a lot of barriers to entry inside this type of business, and there's only a couple of aircraft availability that have this type of operations and they are qualified, which is why I think that the US will come to the company, and the environment favors incumbents like this with assets, contracts, and operational credibility behind it. Fourth thing is, I also think that the market perception usually lags fundamentals, especially when you're looking at small cap companies like this. They rarely reprice at the first sign of improvement. They only reprice when improvement becomes undeniable, when there's a quarter release, there's an earnings call. 2026 is when I think that the execution moves from projections into improvements inside of the quarters. And this is where the typical sentiment shifts, and that is why I think 2026 will matter a lot, not because something suddenly changes overnight, but because progress becomes visible and persistent over the long-term future. So at roughly a $92 million market cap, the stock is priced as if growth is very fragile and execution is uncertain. But we know, as if you've watched this video and you've learned about the company, the forward numbers are suggesting something very different. Revenue is growing steadily, EBITDA is accelerating, and the fleet capacity is continuing to expand. Not only this, but we see that insiders are committing their own capital into the company's shares. Demand drivers are structural, not cyclical for this type of business. And I think that the market will soon see why this stock isn't must buy at a dollar. At a dollar, this is a stock that's tied to real assets, real contracts, and a demand environment that is expanding rather than shrinking. So I think that this is a buy on my radar. It's definitely going to be continuing to be on my radar. I have a couple hundred shares and I'm looking to buy more. If you guys appreciate this video, make sure you guys drop a like. It really helps out the channel. Drop a comment with your thoughts down below. Any stocks you want me to check out, I always appreciate hearing from you guys. Make sure you guys drop a sub. It helps out a lot. Take care.